Friends, today we are going to start a new chapter, that is cash book. Cash book is a subsidiary book. So we will first study about this. We will know what is this subsidiary books and what are the other subsidiary books than the cash book. So subsidiary books, what are subsidiary books? When business is small, all the transactions are recorded in one book, that is called journal, that we have studied, and all the transactions are recorded in the this book in the first time, that is called journal. Earlier we have studied that, but when the business grows and more transactions take place, so recording all the transaction in one book, that is journal, it becomes very bulky and it doesn't have much use. So for to make convenient to recording the transactions and giving more benefit from recording the transactions, some other books are also maintained in which we record the transaction first time. So those books are called subsidiary books. Yeah, books of original entry, we say. Books of original entry means first time, like journal. First time transactions are recorded from the source document. Now the first time in the books transactions are recorded, and different books like this is cash book, one I told you, then journal, another we have already studied. Third one, this purchase book, in which all the credit transactions, credit purchases are recorded. Sales book, in which all the credit sales are recorded. Purchase return book, sales return book, all these books are recorded. Now the different types of subsidiary books. So different subsidiary books are in a big business, 6 type of subsidiary books are maintained for different transactions, different books. Subsidiary books, as I told you, are the books in which all transactions are recorded first time, like journal. First we have done that all the transactions are recorded first time in journal. Same like that when the business is big, so to make it convenient and make it more faster, make it more efficient, different books are maintained simultaneously. Okay, so number one is cash book. Cash book is that we are going to study it now. That cash book is the book in which transactions related to cash are recorded. Means how much cash is coming into the business, how much cash is going from the business, that is recorded here in cash book. Okay, and along with that it is known that how much cash balance is there, and bank transactions are also recorded, and how much how much amount is deposited into bank, how much is withdrawn, how much this customer has deposited, how much is the bank balance. So cash balance and bank balance, for that cash book is maintained. Okay, then how much is deposited, how much cash is increased, inflow of cash and outflow of cash, we can say, and bank. Then comes the purchase book. That purchase book, in purchase book all the transactions related to credit purchases are recorded. Cash purchases already recorded, because while purchasing the goods in cash goes out of the business, so those transactions are recorded in cash book. But here, which credit transactions, when the goods are purchased on credit, are recorded here in purchase book. With this we can know how much total credit purchases are there in a particular this time period, and who are the suppliers. We can find this. Then comes the sales book. Sales book, we record all the credit sales transactions. All the credit sales are recorded in this book, sales book. Then purchase return book. Purchase return book, on which all the credit purchases are there. this credit purchases are goods which were bought on credit. Now if it is returned, so those transactions are recorded, that is recorded in purchase return book. Then sales return book, whatever goods were sold on credit, those goods are returned by the parties, customers, those transactions are recorded in journal proper. Journal proper is the book when if any transaction is there which does not come in any of this category, means which cannot be recorded here, neither in cash book, purchase, sales, this purchase return or sales return book, those transactions are recorded in journal proper. So in a business, all these books can be maintained, or there can be few books as per the requirement of the business can be maintained. It is not necessary that if a business is maintaining the books, it has to maintain all the books. It can, as per the convenience, as per the size of the business, what is the requirement of the business, according to that books can be maintained. Okay, these books are called, because first of all, whenever transaction take place, these transactions are as we were recording in the journal. If we sold the goods, we used to write the transaction in journal in form of journal entry. And if we used to sell earlier, when one book is maintained, so this is the book of original entry. The journal was called when only one book was maintained. But now, because all these books are maintained and first time these transactions are recorded, so they are also called books of original entry, because first time transactions are entered in any book of account, and directly books are entered here in cash book, purchase book, sales book, purchase. That's why it is books of original entry it is called. And subsidiary books, because help subsidiary means which help. Other books, these all satisfy the need of the business together. And then come day book, because day wise these transactions are recorded in all the books. Then special purpose book also. These are the different name of these subsidiary books. Books of original entry, subsidiary books, day books, special, purpose book. Okay. Now the advantages of this subsidiary books. Okay. First advantage is what? Division of work. Division of work means when only one book is maintained in the business, all the work related to recording the transaction is done by one person only. Here, because different books of this original entries are maintained, so as a result what happens, the work is divided among different persons in the business, and the work is divided as per the ability of a person. As a result what happens, work is done in a better way. Then second one is increase in efficiency. When this division of work is there, and work is given according to the ability of a person, so work is done in a better way. Second thing is then, if and that part of work, that part of the work is done by one person, and doing that work continuously, repeatedly, that work, it becomes expert in that work. As a result, there is efficiency in work, increase in the efficiency of the workers. Then comes easy in posting, and becomes quite easy, because when posting means we record the transaction into ledger, that we will study further. So that is called the classification work, because different type of transactions, different transactions related to different account are maintained in this different places relate one this different transaction related to one account is kept in one place. Like we want to record the transaction of purchase, so we will record all the transactions related to purchase in one place. So here while posting also, when we have made these books, it becomes quite easy to post the transaction into the ledger, because instead of posting all the transactions individually, we can put the total of those transactions. Okay, then it is easy for posting. And protection from fraud. In this business can protected against the fraud, because many persons are involved in recording the transactions. If there is only one person who is recording all the transactions, then there are more chances of fraud in the business, because that person will do all the things. As a result, any fraud cannot be disclosed. But if many persons are doing the task of recording the transactions, so it becomes very difficult for a person to do any sort of fraud into the business, or doing any sort of manipulations. Okay, so protection from fraud. Then comes the full information in one place. We get all information related to one thing in one place. Like we want to know the purchases and a credit purchase, we will get it in one place. Wherever or we want to know the position of the cash, we don't, we know it. We can know it immediately on that particular place. But if journal is maintained, it becomes difficult, because the transactions related to one item, one type of this account are scattered in different pages in the book. So, and then flexible. Flexible means if the business don't require all the books to be maintained, it can use as much books as required. There is no need that all the books are to be maintained, or few books are maintained, or all the books are maintained. According to the requirement, it can be. Okay, the flexible. Fixation of the responsibility. Because different persons are responsible for recording the different transactions, so those persons can make responsible for that. So fixation of the responsibility, because one person is responsible for maintaining one type of book, another person is responsible for maintaining other type of books. If some mistakes take place, that person can make responsible for that. So we can fix the responsibility of a person. So these are the different advantages of subsidiary books and cash book. Now we will go to the cash book. Okay, after this. Okay, thank you.